Now, these days, at least trading in 2025, there are a ton of different high income oriented ETFs that offer you S&P 500-ish or straight on exposure, but through a high income strategy offering you the exposure to the S&P 500, which is amazing, of course. But with the use of option strategies, these ETFs deliver us investors monthly income, some higher than others. Now, even though there's tons of different ETFs that do offer you that S&P 500 high income exposure, I'm going to talk about three of my favorite in today's video. Three ETFs that I personally own a ton of shares of: JEPI, GPIX, and SPYI. We're going to go through each of the ETFs that do each offer S&P 500-ish or straight on index exposure. I'm going to share with you guys how each of these ETFs work in detail. Then later on, we're going to compare them all side by side, see what $10,000 invest into each of them would have turned into, and then lastly, reveal my favorite ETF out of all of them. So if you're personally a dividend investor and you are seeking some S&P 500 exposure through a high income strategy, this is going to be the video to stick around for. My A to Z dividend investing ebook has already helped countless dividend investors get started with their journey. And my custom dividend tracker, the one I use all the time on my videos, has also helped so many investors stay organized and has actually helped them see their dividend income grow. Well, today I have something even better for you guys. When you click the first link down below in my description and you grab my A to Z dividend investing ebook, today you're not only going to get the ebook, but you're also going to be getting the custom dividend tracker, which you can use to track your own dividend income ongoingly. Get direct access to my personal email where you guys can email me any questions regarding dividend investing. You're also going to receive a link to view all of my holdings inside my 7-figure dividend portfolio and see all the positions I add and take away ongoingly. And you're going to get for absolutely free my brand new high yield dividend investing ebook, where I show you the power of maximizing some of these high yielding ETFs and teach you everything there is to know about that also. This is going to be your one shot to grab everything inside of one single bundle, but you got to move quick because I'm not going to offer this for long. Now, with all that, let's get back into the video. Now, first going through JEPI, the JPMorgan Equity Premium Income ETF. This ETF doesn't offer you one-to-one S&P 500 index exposure, but offers you very similar names within the S&P 500, so we're still going to group it in. Now, JEPI is an ETF that I've been holding on to for a long time. I would honestly say this is one of the first ever premium income ETFs I ever bought in my portfolio, just because this ETF has been trading for quite some time now. The way that JEPI works, it says seeking consistent premium income with lower volatility. JPMorgan Equity Premium Income ETF seeks to deliver monthly distributable income and equity market exposure with less volatility. It then says expertise, experienced portfolio managers leveraging a time-tested process with decades of combining investing experience in equities and equity derivatives. The JEPI portfolio says defensive equity portfolio employs a time-tested bottom-up fundamental research process with stock selection based on proprietary risk-adjusted stock rankings. But then with that discipline option overlay implements written out of the money S&P 500 index call options that seek to generate distributable monthly income. Now, how much income are we talking when it comes to JEPI? It says right here, providing an attractive 12-month rolling dividend yield of around 8.13% or the last 30-day yield of around 8.62%. So yeah, since inception, JEPI has offered investors like myself, because I've owned this one for a very long time now, pretty consistent-ish monthly income, sometimes higher and lower, but on average since inception, probably around 9% yield if I were to guess. Now, back in the day when premium income ETFs were a little bit harder to come by, and JEPI was one of the first ETFs to ever do this. Gaining exposure to a high quality portfolio of different blue chip names like these, for example, plus an option overlay gave investors like myself no nap decay whatsoever. The ETF has grown over time, which I'll share with you in a second, and monthly income, which is pretty nice. But I will say over time, JEPI has become less and less popular in my humble opinion, just because there's so many premium income ETFs out there that have much more sophisticated option strategies compared to JEPI. Now, that being said, JEPI on the max time frame is up around $6.77 as of filming this video, around 13.5% in the green on the max time frame. So JEPI hasn't grown like crazy, but hey, in the high income world, even if it's only 8-9%, an ETF that's grown at all over time isn't bad whatsoever. The next S&P 500 ETF that I own a ton of that I also want to talk about, one of my favorites as of right now, is the Goldman Sachs S&P 500 Premium Income ETF, or GPIX. Now, the way this ETF works, it says overview, seeks current income while maintaining prospects for capital appreciation. So income is going to be the main priority, then capital appreciation is going to be secondary, even though since inception, this ETF has grown very nicely just as far as price return goes. Now, it says reasons to consider investing into GPIX, seeks consistent monthly distributions, which I'll share with you guys here in a second, how much and how much yield, broad equity exposure with lower volatility. The great thing about GPIX is that they do dynamically sell call options, which means there is going to be a lot more participation in some growth for the portfolio if and when the S&P 500 turns bullish. Now, lastly, diversify source of income, seeks to deliver attractive income with lower correlation to traditional income sources and their risks. Now, with GPIX, how much yield are we talking? We're talking around 8% yield with pretty consistent distributions, as so far over the last year, around 35 cents per share per month on average. Now, 8% yield isn't necessarily anything to get super excited about these days, especially when there are S&P 500 premium income ETFs that do offer much more than this. But I think it's also important to note that because GPIX, or the Goldman Sachs S&P 500 premium income ETF, does dynamically sell call options, this ETF has grown like crazy over time, up around 33% just as far as price return goes. Now, believe me when I tell you, when it comes to premium income ETFs, it's very rare, especially during this short of a time frame, to see a premium income ETF that yields anywhere from 8%, 9% to also grow 33% unless it's attached to something very high beta, which the S&P 500 has a beta of 1. Now, because I personally do believe in the S&P 500 long term, I think it's going to keep performing quite well for years to come. I think an ETF like this one that doesn't necessarily have a 100% capped upside is definitely an ETF worth looking into. But lastly, my personal favorite S&P 500 high income ETF, SPYI, or the NEOS S&P 500 high income ETF. Now, this ETF's objective, it says right here, seeks high monthly income in a tax-efficient manner with the potential for upside appreciation in rising markets. Now, the great thing about investing these days is that there's so many different ETFs out there. Some of them are going to offer more of this, and some of them are going to offer a little bit more of that. But the cool thing is that you can literally find an ETF that offers exactly what you're personally looking for. I truly believe that. Now, for me personally, I am seeking high monthly income. I want it to be as tax efficient as possible. And then sort of secondarily, I am looking for some potential upside appreciation, sort of as an afterthought. So SPYI in that case does cross off basically everything that I'm looking for. Now, the way SPYI works is that it once again buys into the S&P 500 and then of course sells covered calls in it. The distribution rate for SPYI is very consistent at 12% more or less. Monthly distributions at that, and around 50 cents per share per month is what most of us investors are expecting at this point. SPYI has not decayed whatsoever over time also. It's up in the green, up around 8%, up around $4 per share, and it has been trading now since around 2022. Now, like I just mentioned a second ago, out of these three ETFs, my personal favorite is going to be SPYI just because the objective does match exactly what I'm personally looking for. I want high monthly income. I want it to be as tax efficient as possible, and I also want some capital appreciation sort of secondarily. But I will say my second pick is easily going to be GPIX in this case. In this case, the number one performer by a lot. On the max time frame, stacking up all three of these names next to each other, GPIX is up around 55%, SPYI is up around 44%, and JEPI is up around 26%. The total returns don't look horrible across any of these names, but GPIX is by far going to be the winner because of the option strategy they've been using. So even though I do own shares of JEPI, SPYI, and GPIX in my long-term portfolio, my favorite pick personally out of these three is going to be SPYI because of that consistent monthly income. Number two is going to be very, very closely behind GPIX, which maybe in the future will even be my number one pick, who knows? And then third is going to have to be JEPI, an ETF that I do still hold on to, but I haven't bought a lot more of in quite some time. So now that we talked about three very popular high income ETFs, three ETFs that I'm sure you've either looked into or maybe even own shares of in your portfolio as of right now, I lastly, most importantly, have a question for you guys down below. Between JEPI, SPYI, or GPIX, which is your number one favorite and why? Let us know in the comments down below. If you enjoyed this video, make sure to please drop a like in it, subscribe, and I'll see you guys in the next one. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.